let's talk about what our agenda is for the objections. We're going to look at 10 responses things you should say to overcome life insurance sales objection. What's a life insurance sales objection? It's someone who's like, I don't want life insurance because of this. I can't buy it, or I can't afford it, or I can't this. So we're going to look at 10 objections. Number one, I can't afford it. Number two, I already have insurance through work. Number three, I need to think about it. Number four, I need to talk to my spouse. Number five, I've never heard of your company. Number six, I'm healthy. I don't need life insurance. Number seven, I don't believe in life insurance. Number eight, I'm not ready right now. Number nine, I don't trust insurance companies. They never pay. And then number 10, I'm already leaving a savings and property or investments and stuff. I don't need to leave them life insurance. So we're going to look at those 10 objections. Now, how do we make sure that this works? First of all, you have to understand, when you're dealing with any sales, I don't care what it is, there's always a logical and an emotional reason to say yes or say no. I say yes. I focus on yes because I'm a sales guy, right? So I'm always trying to get you to say yes because I know it's in your best interest. But there's always a logical and emotional reason. The problem is we lock into our way of selling. A lot of times we don't listen to the customer. The customer's telling us all the emotional reasons that they're saying no, and we're still trying to sell them on logic. Or the customer's telling us the logical reasons they're saying no, and we're still trying to sell them on emotion. Well, you need a benefit. You need to be able to benefit them both by using logical and emotional, and then listening to them and understanding they're leaning more toward logic or they're leaning more toward emotion. So today, I'm going to give you an emotional response, and I'm going to give you a logical response. I'm giving you a lot of handouts, guys, a lot of handouts. So if you are on the computer, you need to go under the handouts tab. If you're on the phone, which I know a lot of you are on the phone, then when I send out the recording of this, I'll make sure that those attachments are part of the recording. But for live right now, I need for you to go under the handouts tab that's on your GoToWebinar toolbar there. And you're going to see 5 handouts, okay? 5 different handouts. You're going to see the actual sales objections, the things I'm going to train on today. I'm giving you all of those. You're also going to see a life insurance marketing questionnaire that we use with all of the agents who work with us to help you build your life insurance business. Okay, that's the whole point. It's to help you build your life insurance business. Then I'm going to give you the partnership, National Life Group that Tom talked about. I'm going to give you the contact information for National Partnership Group. I'm also going to give you Tom's contact information, and I'm going to give you Tom's presentation. Tom's going to have a presentation here toward the end, and I'm giving you that presentation as well. So you will leave here with a bundle of stuff. You'll have a bundle of things that are going to work for you. I'm going to go ahead and cut my camera off right now, and so you can focus on the screen, and we will get going on this. So first of all, let's talk about logical or life insurance things, or life insurance wording, and it's real structured. It's all about the debt and the expense and the future and how logically this is going to affect your family. And the emotional really talks about peace of mind. Okay, that's what it's really about. When we talk about the emotional, are you going to have a peace of mind? So let's look at some of these. Number one, I can't afford it. So what's the logic-based response to that? Well, my statement is, I completely understand. Most people feel that way at first, but let me ask you something. If it was 2 minutes before you died, and I could only get one policy written and issued in time, what policy would you want me to write? 2 minutes before you died. 99% of people are going to say life insurance. So let me ask you a question. Do you know when your 2 minutes is going to be up? Do you know when your 2 minute countdown begins? Because I don't. Okay. I know there may be people out there who know they're going to die in 2 minutes, who know they're going to pass on in 2 minutes. I don't know when my 2-minute countdown begins. Do you know when yours begins? If I came to you 2 minutes after you died. So if I came to you 2 minutes before you died and asked you what you would want me to write, you'd say life insurance. But let's say I came to you 2 minutes after you died and I said, I could sell you any amount of life insurance that you want to leave to your family, but it's going to cost you $10,000. Your family's going to have to come up with $10,000 and you can name the amount of life insurance you want to buy. How much would you buy? You'd buy as much as you could, wouldn't you? You buy some astronomical number because you want to leave a good amount to your family. So the issue isn't that you don't see the value. We get that. If it's 2 minutes before, you want life insurance. If it's 2 minutes after, you want as much life insurance as $10,000 can buy. So it's not a value issue. You just don't know how much you can afford, or you just have some other reason. So what I suggest we do, let's look at small numbers first and let's work our way up. That way we can balance what you can afford with what you want for your family. That's logical. Now let's look at emotional. So I know budgets are tight, but death is permanent. Life insurance isn't a luxury. It's protection that keeps your family's life moving forward when yours stops. Even at $1 per day, I can keep the lights on for the people that you love most. See, that's an emotional response. Remember, logic is about, does this make sense? Does this line up? Can I afford it? Emotion is about, will you leave someone a peace of mind? Okay, is there peace of mind? So that's how we're going to go through these 10 objections. We're going to look at a logical-based response, and then we're going to look at an emotion-based response. I'm giving you word tracks. I'm giving you things to say. You can modify those however you want to. It's sales. Sales is not a science, it's an art. So you can modify that word track however you want. But just understand, the person will tell you what you should say if you just listen. If you just listen, and if they're still talking about, well, I can only afford this, and I've got this, and this is the only thing and they're not talking about peace of mind. They're not talking about making their people feel comfortable. They're not talking about their daughter's wedding being paid for. They're not talking about anything emotion-based. Then you need to stick on the logic-based. You can close with emotion, but you need to make sure you're selling on the logic, because that's where they are. Whereas if it's just the opposite, if they're talking about, well, I do want to leave my kids something. I don't want to leave my kids out here and they have to, my family have to take care of them forever. And my kids, I didn't leave them any money for school or for their marriage or for my grandkids. Now they're talking emotion-based. Then you need to stay on the emotion track. Stay on the track until the track ends. At some point, everybody eventually goes to logic. No matter how emotional they are, at some point, they still have to pay for it. So eventually they end up at logic. But you need to stay on the track that they're on as long as possible. So that's why I'm giving you a word track. So that's the first one. I can't afford it. Number 2, I already have insurance through work. So what's a logical response? Well, that's great. You're already thinking ahead. But remember, most employer policies end when your employment ends. If you leave, retire, or the company changes benefits, that protection disappears. Let's make sure you have a plan that you own, one that goes wherever you go. So that's logical. But emotion is, your family's protection shouldn't depend on your employer's HR department. A personal plan ensures your coverage doesn't vanish the same day your job does, and your family can continue to have the income you would have provided had you not died or had you not left that job. So that's the emotion-based response and all of that. Let's go to number 3. I need to think about it. It's one we hear all the time. I need to think about it. Here's the logic. Here's a logic word track. Of course, it's an important decision, but just remember this. Your 2-minute countdown could start anytime. And none of us know when that will be. The good thing is you don't have to decide how much to buy today. You just have to decide to protect your family while you still qualify. We can work on the amount, we can work on everything else, but I just need you to say, yes, I'm going to make this decision. The good thing is you don't have to decide how much to buy today. You just have to decide to protect your family while you still can qualify. That's logic-based. Let's go to emotion-based. You know, I've seen too many people wait to think about it, and then something unexpected happens. We don't want that. You can always adjust your coverage later, but you can't turn back time once your health changes or your countdown starts or some other issue disqualifies you. You get diagnosed with cancer. You get diagnosed with some other illness or high blood pressure that drives the rate up to the point you can't afford it, or diabetes or whatever. So I understand you need to think about it, but every second that you're thinking without making a decision is a second closer to you not being able to qualify. And it drives the rate up. Your rate gets more expensive the older you get. So while we're talking about think about it, let's make sure that we're thinking as fast as possible to make the best decision for our family. Okay? I'm going to do one more, and then I'm going to bring you guys in to talk with me here. I need to talk to my spouse. We all hear this. Here's a logic-based response. I completely understand. That's the responsible thing to do. I'll send both of you a short video proposal where I explain the coverages in simple terms so you're both on the same page. But let me ask you a question. If your spouse were sitting here right now, do you think they'd want you to make sure the family is protected if something happened to you? Most people say yes. What's an emotion-based response? If I came to your spouse 2 minutes after you die, 2 minutes after you pass, and said, I could have gotten a policy that would have paid your family hundreds of thousands of dollars for only a few dollars a day, but he said he wanted to talk to you about it first. He just never had a chance to talk to you. How do you think your wife would feel about that? That's why these conversations matter now, not later. So the reason I'm sending a video proposal is because I don't expect you to talk to me for 20 minutes and then go be able to do my job. Just like I couldn't walk on your job, watch you work for 15 or 20 minutes, and then feel like I know his job well enough that I could take over his job. Well, you can't talk to me for 15 or 20 minutes about life insurance and think that you can go back and explain to your spouse what I can explain to your spouse. So that's why I'm doing a video proposal where I'm showing my knowledge, expertise, and wisdom and doing my job, and letting your wife see my passion, my enthusiasm, my knowledge, my wisdom, my expertise about how I do my job. So objection number 5. I never heard of your company. Well, the logic-based response would be, that's fair. Some of the strongest, most stable insurance companies don't spend millions on commercials. They focus on long-term value and customer service. As an independent agent, I represent many top-rated carriers, so my job is to find the best fit for you, not push one brand or one carrier. So what's the emotion-based response? You're not buying a company name, you're buying financial peace of mind for your family. The company's logo won't feed your kids or pay your mortgage, but the right policy will. The companies that spend the most money on marketing and prospecting usually have the biggest profit margins between what they charge compared to what it costs them to provide you coverage. As an independent agent, I represent many top-rated carriers, so my job is to find the best fit for you, not to push one brand or one carrier. Guys, if I don't care who you sell, you can sell the MetLifes, you can sell the Bankers Trust, you can sell the whoever. At the end of the day, It's all about that company having the ability to pay that claim. And there are a lot of companies, big companies, that will find reasons not to pay a claim. And there are a lot of smaller regional that are amazing at paying their claims. So hopefully you're only selling a good product. You know, you're not selling blah, blah, blah insurance out there that doesn't pay their claims. Hopefully you're selling a good product. But what I said earlier, let's say there's a company that has one life insurance product. That's what they sell. They're one company. And they spend millions and millions and millions of dollars to promote that one company. Well, guess what? For them to spend that kind of money, the profit margin must be pretty good, because they're not going to spend millions and hundreds of millions of dollars to lose money. So that means they got to be making money. Now, does that mean they're a good, strong company? It might. Does that mean they're a company that's going to pay their claims? They might. What's most important is you as the agent need to represent the best companies. You as the agent, do your due diligence and represent the companies that pay their claims. I'm going to get off that horse before I say something that gets me in trouble. Make sure you're selling good life insurance. Don't sell junk paper. Sell good life insurance. Let's go to number 6. I'm healthy. I don't need life insurance. I hear that all the time. I'm healthy. I don't need life insurance. So here's logic based. That's exactly why you should get it now, while you're healthy, while there's enough quality going on in your life that you can lock in the best rates. See, when you're healthiest, you get the best rates. So if you're young and you're healthy, now's the time to buy life insurance. You're 25, you're 26, you're not married, you have no kids, you have no whatever. Get it now. It's cheap. Because what happens when you're 45 and you've got 3 kids, or you've got 4 kids, and you're talking about getting married, and all of a sudden you got diabetes, you have high blood pressure, you have a melanoma, you have some kind of ovarian issue going on. Now all of a sudden, all that life insurance that you could have locked in when you were 23, 24, 25, you could have locked in buku life insurance at a cheap price. Now you wish you had done it. And people say, yeah, but it's 20 years later. I'm saving money down the road. That's money I saved. No, you didn't. Let's say you locked it in at $20 a month. And you did that for 12 months. So now we're looking at what, $240? Then you did that for 10 years. So now we're looking at $2,400. Now it's 10 years later, and now your premium is $600 a month. So you didn't save money, because now you got to this point where you need it and you got to spend 20 times, 50 times more to have it. So guess what? Now is exactly why you should get it, because you're healthy enough to lock in the best rates. Life insurance isn't for the sick. It's for the smart. You can't buy coverage when you need it, only when you don't. You can't buy coverage when you need it. You buy it when you wish you had got it earlier. That's the logic base. What's the emotion based? Healthy people don't buy life insurance because they think they'll die tomorrow. They buy it because they love someone who might suffer tomorrow. They buy it because they lock in the benefits, the living benefits that will come with having it now. Remember, many policies include living benefits, money you can use while you're still alive if you face a serious illness, injury, or financial hardship. Yes, I know what you're saying. Well, Billy, I'm healthy. I don't need it. Just remember, healthy people don't buy life insurance because they think they'll die tomorrow. They buy it because they love someone who might suffer, or they buy it because of the living benefits when they can get it at the absolute cheapest. So you're taking care of yourself, and you're taking care of the future that you love as well. I don't believe in life insurance. You'll be amazed how often you'll hear this. I don't believe in life insurance. I'm not leaving life insurance for her and her next boyfriend. I mean, all this stuff. So what's a logic based? I understand. But life insurance isn't about belief. It's about transferring financial risk from your family to the insurance company. It's one of the oldest, most reliable contracts in existence. So if you're logic-based, then let's keep it logical. Suppose you're emotion-based. Hey, if I came to you 2 minutes after you died and said, for $10,000, I can still get your family a check for $500,000, how quickly would you want that policy written? So it's not about belief. It's about love and responsibility. Now, if you don't love your family enough to be responsible, I can't make that decision for you. If you do, I can help you to process that decision. So let's get back into number 8. I'm not ready right now. The logical based response is no problem. Can I ask what needs to happen before you'll be ready? Most of the time, it's just a question of budget or timing, and we can adjust either one. But here's the thing. Your eligibility and your rates are based on your health today. Waiting doesn't help you. It risks losing what you qualify for. So that's logical. Emotion. Ready is a feeling that doesn't come until it's too late. Life insurance is one of the few things you buy that guarantees your family's future, even if yours is cut short. So when your 2-minute countdown starts, you'll wish you had done it today, or you wish you had done it earlier. So there's a word track you can use. Number 9. I don't trust insurance companies. They never pay. Logic-based. Well, that's a common misconception, but it's not true. Life insurance is one of the few financial products with a legal obligation to pay as long as the policy is active and the claim is valid. Carriers pay out billions of dollars every year, quietly, without fanfare, to families who made the right choice in time. Emotion response. If people really knew how many families were able to stay in their homes and send their kids to college because a loved one bought life insurance, they'd stop doubting and start doing. Number 10, I'm leaving savings, property, or investments behind, so I don't need to leave them life insurance. Logic. Well, that's excellent. You've planned well, but life insurance isn't about replacing your assets. It's about protecting them. It pays the immediate bills, funeral costs, debts, income replacement. So your family doesn't have to sell your property or drain your savings to survive. What a lot of people don't realize, when I leave you property, when I leave you a building, when I leave you whatever, I'll leave you a debt. Okay, that's what I'm leaving you. I'm leaving you an asset that's tied to a debt, because there's tax things I have to do. There may be maintenance that I have to do. There's all these debts that are associated with that asset. If I didn't leave you money to pay the debt associated with the asset, I didn't leave you the asset I planned on doing. Okay, remember that logically. Number 10, emotion-based response. You've built something valuable. Life insurance ensures your family doesn't have to sell what you built just to bury you. It buys them time. It buys them time to grieve. It buys them time to adjust. It buys them time to keep your legacy intact. Guys, I don't know about you, but I promise you, if someone that I love died tomorrow, I'm not going back to work the next day. I may not go back to work the next week, the next month. So yes, when you build something, you want to give your family time. You want to give them time to grieve. You want to give them time to adjust. You want to give them time to work, time to just recover from your loss. Especially if you lost a parent. If you're a child that loses a parent, how much time will that child need? If you're a parent that loses a child, how much time will you need before life is back to even semi-normal? You got enough finances, you can help to ride out the storm. It's not going to eliminate the problems, but it will help to ride out the storm. All right, so let's look at quickly at some of the living benefits of a life insurance policy. So there are 5 living benefits that I want to discuss. There's more, but these are 5 I want to discuss. Number 1, chronic illness. So you receive a portion of your death benefit if you can't perform 2 or more daily living activities, such as bathing yourself, dressing, feeding yourself. You can retrieve or receive a portion of those death benefits. Critical illness. Let's say you have a major event like cancer, heart attack, stroke. Well, you can access part of those benefits of your life insurance policy while you're alive. Terminal illness. So if you receive a large portion of your policy, you can receive a large portion of your policy while alive if diagnosed with a life expectancy of 12 months or less. That helps you cover bills. That helps buys you time to prepare. That helps you to do all the things that you need to do to prepare for you not being there. Cash value. So you can build a tax-deferred savings that can be borrowed or withdrawn for emergencies, retirement income, or business use. We call it BYOB, be your own bank. If you start early enough and you start building a cash value accumulation, let's say you start in your 20s. Now all of a sudden you're in your 50s, right? Well, yeah, you got your retirement, you got all that other stuff, but now you want to buy a house. You don't have to go to a bank. You've accumulated enough cash to where you can borrow against your own life insurance or borrow against your own cash and be able to be your own bank, okay, at 0% interest most of the time. It just took the discipline of you building up the cash value. That's the thing. Everything involves discipline. No matter how successful a person is, I can always go back and look at the discipline that they show to become successful. So if you want to be wealthy, be financially disciplined with your money. That could be you not wasting your money. That could be you saving your money. That could be you putting your money in things like life insurance where you can't go pull it out. You can't waste it when you get an urge or an emotion. And number 5, supplemental retirement. Some permanent life policies allow tax advantage withdrawals or loans to help supplement retirement without affecting your Social Security or your pension. You know, if you make enough money, Social Security doesn't benefit you. You don't even hardly get your Social Security benefits if you make enough money, okay? So, or your pensions if you make enough money. So you can have a supplemental retirement. These are just 5. There are more of them out there, but these are 5 that I wanted to discuss. And I'm going to end my presentation with this one thought, okay? This one thought. Everyone has a million problems until you have a severe health problem. Then you only have one problem. Guys, health is wealth. So when you're setting up your life insurance, get the riders that help protect your health, the critical care, the long-term care, all those particular things. Because like the saying says, everyone has a million problems until you have a severe health problem. And then you only have one problem, which is your health.